Hello again, everyone. First of all, I want to wish everyone a very Merry Christmas and Happy Holidays. I hope you all have a wonderful week this coming week. Now, again, it's a holiday shortened week. We have the stock market closes here in the United States on Tuesday at noon Central Time, 1 o'clock Eastern Time, and then it's closed on Wednesday for Christmas. So that is the calendar. The whites of their eyes. I called this technical analysis stock market video, the whites of their eyes. And, this is often attributed to Colonel William Prescott, the Battle of Bunker Hill, June 17th, 1775, in the Revolutionary War in the United States. Don't fire until you see the whites of their eyes. Now, that phrase, that saying came to mind as I thought about where we're at, how extremely overbought we're getting when we're getting bearish divergences showing up. We're getting a lot of extreme sentiment showing up in options trading and other areas. And there are other signals that are being given off right now, a couple of which we're going to talk about in this video. So the thing that comes to mind is that we have to really be patient in here if we're trying to figure out and say, well, when do I want to go short? When is this market really breaking down? Or when should I be exiting my positions? When is it breaking down? Well, we got to let price tell us. Now, I'm looking for clues. We're analyzing the wave structure right now. When you look at the S&P, it was up 15.85 on Friday. You look at the RSI, and again, I use the 10-day RSI. We're up here, we're getting some bearish divergence showing up in here between the November 27th and the December 20th readings. And we had a little bit of that back in November, and we did get just a sharp 2-day correction. That was it. I think we're getting a little bit more now. So we'll see how that plays out over the next couple of weeks. The other thing that's on my mind is we're approaching January, and we're approaching January at the end of a pretty good run. Some of this sentiment, etc., kind of feels like December 2017 going into January 2018. So that's another thing to just kind of keep in mind. For the week, the S&P 500, when you look at the weekly chart, it's been pushing pretty strong. It was up 52.42 for the week. So that's the weekly view over here. Let's take a look at the Elliott Wave picture. So here's where I think we are in the Elliott Wave pattern. I think we're in the 5th wave of a 5-wave move from March 2009. Okay, so now looking at this 5th wave, what do I think's going on? To me, it best counts as an ending diagonal pattern. I know there are other possible patterns in here, scenarios. But to me, this one counts as the best, and we'll continue to watch and see just what is the market telling us, how does the wave counts unfold. So when you have an ending diagonal pattern, you're looking at 3-wave structures, zigzag type structures for each one of these waves. So let me go ahead and just put a little more detail in here. So this is what we're looking at, and I'm going to zoom in. So right now, I think we're in this 3rd wave right here, and I think we've got a zigzag going on in this 3rd wave. And typically in a zigzag, it's a 5-3-5. Okay, that's the way a zigzag unfolds. So as I look at this 3rd wave in here, this C wave of the 3rd wave, I'm looking at this for a 5-wave pattern. And that's what I think we have. I think we're in the 5th wave within this this move that bottomed and started on October 3rd. Okay, let's take a look at the 195-minute chart. Okay, this gives you a little bit more detail. This provides 2 bars per day even. Okay, there's 6.5 hours in the trading day. Okay, in the United States, there's 6.5 hours in the trading day. So when you divide that evenly by 2, each bar is 3 hours and 15 minutes or 195 minutes. Okay, so that gives you one picture. And let me give a little more detail. So this is what I think is, when I lay that out, I think we had 1, 2, a expanded flat 4, and then into the fifth wave. And now what we're doing is looking at this final fifth wave push up into here, which again, we're getting overbought. We're getting in the tail end of this push. What do we have in this last leg to the upside? Let's take a look at the 65-minute chart. I know somebody commented and said, why don't you explain to folks why do you use 65 minutes? And that's probably a good thing. I call it my hourly chart because in effect, that's what it's doing. It's dividing the 6.5 hours into 6 equal bars, but it's close to an hourly chart, 65 minutes. But I like the fact that it divides the 6.5 hours into 6 equal bars. Now, some people could use just a standard hourly, but if you still use a standard hourly, you're going to have 7 bars for the day because you're going to get an hourly reading at 9 o'clock Central Time, and then 10, 11, on. And that first hourly reading, quote unquote hourly reading, is only 30 minutes. So it's 6 one, half dozen of the other. This is what I like to use. So now you know. All right, so here's what I'm looking at with this last leg to the upside in here. And my best shot at the detail on this is that we've done something like this. Now, I could make the case that maybe we had a wave 1 down in here, and then this is a part of a bigger wave 3, but I kind of like the way this fits visually in here. Then this would make it look like we've got possibly one more push to the upside to complete a little 5 wave segment for this 5th wave in here. So that's what I'm watching, looking to see, is that really going to play out? But the other key is I'm watching this trend line. Do we break down out of this trend line? And then if we go back to the daily, and then once we start to break down, do we break down out of this channel in here and signify that we are on the way to doing this 4th wave? This 4th wave over here in an ending diagonal, it needs to overlap wave 1. Okay, so it needs to come down into the territory of wave 1. And that's only valid when you have an ending diagonal pattern. And then once that's complete, we're going to push up into 5th wave. Now, in terms of where I have these, in terms of the numbers and the levels, these are just placeholders. Okay, I'm not saying I think it's going to this level, etc. My target for having this down here is just to show that it needs to overlap wave 1, and then we have a zigzag for wave 5 going to the upside. Now, when I think about what could possibly be happening, I could see how we could end here going into the end of the year, or maybe into the first week of January. Then we get a pullback that happens into February, and we rally into April, maybe the end of April kind of thing. And then there's the classic sell in May and go away that could take place, that would sync with the end of the 5th wave. We'll see what happens, see what we get as we proceed here. All right, so that's the best take I've got here on the S&P at the moment. Let's take a look at the percent of stocks that are above their 50-day moving average in the S&P 500. Okay, here we go. Here's the percent of stocks above their 50-day moving average. You can see we closed at 80.88 on Friday. So after we had that little breakdown that occurred at the beginning of the month, we have pushed higher, and we're up into pretty extreme reading. I drew a line in here at 70, and then I've got the red line at 80 just to denote that we're getting too extreme. It's kind of like my overbought zone is what I've got. Down here is the same thing, only oversold. And again, this is a scale from 0 to 100 because we're talking about percent. And, we've been up where we punched above 80 a couple of times earlier this year. So it'll be see how long we stay there. But again, this is just one more little flag that's saying, hey, we're getting a little extreme. We're not down here. We're up here above 80%, and we don't stay there that long. Okay, so that's just one more thing that's going on. Let's take a look at the VIX. Okay, the VIX was really unchanged on Friday. It was up 0.01. It closed at 12.51. So here's what I did in terms of trying to identify where we're at. Here you can see the last 5 bars. So this is last week's worth of trading on the VIX. I simply put a green bar at the bottom of that range and a green bar at the top of the range to say, okay, here's where we were for the last week. How does that compare to where the VIX is or has been? And then, you know, when it came out of that zone, what did it do? And I'm basically look back and you can see this is the zone that tends to be where the VIX has been bottoming at least over the last, 2 years. So if you go into 2018, you can see, yeah, we did get a little bit lower for a couple of days, but by and large, this is kind of the bottoming zone that's been happening for the VIX. Now, there has been a year, September 7th, 2017, got to be a lot more extreme in terms of very low readings of the VIX. But as I said, just looking at the last 2 years, this is pretty interesting. So it's going to be, I think, interesting to see how long do we stay down here. And then if we start to erupt again, like we did back here a couple of weeks ago, my target's going to be a break of this trend line, because I think when this trend line breaks, I think we're going to get a real eruption in the market. But right now, we're down in the basement on the VIX. Okay, that's it for this weekend. If you felt like the video was helpful, hit the thumbs up. And if you're not a subscriber, subscribe. And if you'd like to have more of this kind of information on a regular basis, head over to joehenches.net. I got it in here as a little watermark. joehenches.net. It's beyond the chart. And check out the website, check out the membership. Everyone have a wonderful Christmas and a happy holidays, and we'll talk to you next weekend.